Sabrina, would you like me to get started?
We are good. Yeah, go ahead.
Great. Well, hello, everybody. Thank you so much for being here today. I'm Joanna Schnedler, and I'm the Executive Director for the Minnesota Music Coalition. And I want to welcome Sabrina Fay, who is here joining us from the Pathways team of Thrivent. And we're so thankful that Sabrina can be here with us today, and will be also joining us for a workshop in April on personal finance. So I'll just turn it right over to you, Sabrina.
Wonderful. Thank you so much. So how I like to kind of begin is basically say, I want this time to be as interactive as possible. I really appreciate you setting aside some of your valuable time to maybe learn a little bit more about finances. What we're hoping to cover today is the CARES Act as it still applies this year, as well as some of the base of the financial, sorry, gosh. Oh, wow. Let's hope this doesn't continue. Thinking about the base of the financial pyramid, so the financial foundations and how that can help you thrive, and also talking about the appropriations bill. So that was the large piece of legislation that was passed at the end of last year. Now, this content is a lot more fun if it's interactive. And so we can do that in a number of ways. You can raise your hand and then go off of mute and ask your questions that way. I'm thinking you also have the ability to ask questions with a Q&A or a chat button. Wonderful. So I really do enjoy this to be interactive. I know that may or may not be what you're used to. So however you would like to get questions for me, I absolutely have an entire slide presentation that we can use for the next hour. I am equally comfortable kind of going off script and going from there. So let's go ahead and dive in, and then we'll kind of see how you feel as we go. So as you probably recall, the CARES Act was passed last year in order to allow some flexibility with retirement savings. It made some changes to student loans and then also encouraged some charitable giving. And you may be asking yourself, well, why are we talking about this? Because it was passed last year, and didn't it expire at the end of last year? Well, the interesting thing about it is, first off, some of the provisions have been extended into this year because of the appropriations bill that was signed at the end of last year. And then also, some of you may have taken advantage of some of the flexibility with your retirement savings. So you might have taken out some of your retirement dollars. And so I want to make sure that you understand what the implications are if you took some of that money out. Namely, especially since you might not have filed your taxes yet this year. So I want you to know what it means if you took money out early. What the default the IRS is going to assume if you took money out of your 401k, and how you may not want the default to apply. Oh, and before I go too far with that, I do want to say that because I am a certified financial planner, it's very important for you to know that I'm not providing any advice during this workshop because I don't know enough about you specifically. So I'm trying to provide some general financial education. I do invite you to take me up on what I call a workshop part 2, where we can sit down and I'll be happy to answer your one-on-one questions. It's a free session. It's 1 hour, and I'll answer everything that I can for you in 1 hour. It's what I do for free for anybody that comes to any of workshops like this and I offer in the community. And that's where I can answer more specific questions related to your situation. That being said, I still want you to ask questions during this hour, because otherwise, especially in these Zoom rooms, it can get a little bit paranoid to feel like I'm just talking to myself for an hour. All right, let's dive into the CARES Act. So what could we do last year that was unique? Basically, the CARES Act last year allowed us to take up to $100,000 out of our 401ks or IRAs, even if we were not 59 and a half, and not pay the 10% premature penalty for being under the age of 59 and a half. It did not, however, keep us from having to pay taxes on it. So that's what was unique last year. As far as we know, this has not been extended to this year. So don't go doing that this year, because as of yet, that's not allowed. The other thing that was available last year was the ability to take out a loan. So just know that things are handled differently. If you did a loan, then you didn't incur a tax burden because you're going to be paying that money back. You might not be paying it back yet, but loans don't incur a tax burden. Taking the money out as a withdrawal does. Also, the other thing that occurred last year is that Congress had said, and this I think one reason they did this, if we remember about the timing, is at the beginning of last year, the market also dropped when COVID took off at the same time, right? So Congress quickly passed this idea that you don't have to take required minimum distributions. And that was just for 2020. That is also not something that they added for this year, and we don't anticipate them adding. Now, student loans is another area where there is a lot of interest, and we also need to be careful because there's a difference when we talk about student loans between federal loans and private loans. And some of you may be impacted by student loans, either because you took out the loans, or maybe, I should rephrase that, either because you took out the loans for yourself or because you were the co-signer for the loans for your children. For federal loans, repayments originally were suspended through the CARES Act through the end of September, and then that was extended through the end of December, and now it has actually been extended through this year. Interest rates have also been set to 0 on student loans, and there has been continued conversation around whether or not student loans will be partially forgiven at some amount. And we've heard amounts anywhere from, you might have heard last year that the Democrats tried to pass a sequel to the CARES Act that would have forgiven student loans in the amount of, I think they had proposed $10,000. We've heard amounts of $50,000 suggested. I know at one time there was a strong belief that when President Biden took office, that he was going to sign an executive order forgiving for every person with public student loan debt $10,000. We just don't know what it's going to look like. One thing to know is there's a general consensus that we're not going to see anything on student loan movement seems to be a little bit delayed. There's been how do I say this? There seems to be a consensus that something should be done. There's a disagreement around how much should be done, and should it be done universally for all student loan holders, or should a larger amount be done but be targeted for people that qualify in some sort of manner. The one thing to know that applies to anybody that has public student loan debt right now is that your interest rate is set to 0. And depending on your student loan debts, you may not have to make payments right now. Now, I purposely don't start out these workshops talking about who I am because I just think that's boring. But what I will tell you is that I have 2 areas that I work in. The primary area that I work in with families and business owners is really around tax efficiency. That's where a lot of my passion lies. I want people to render to Caesar what is Caesar's, but do it only one time. That's just really important to me. The other area that I have a passion around is college funding, either figuring out how to pay for it efficiently as we prepare to go to college, or paying off what we've already attended. Now, that part of what I do, I've been trying to find somebody to kind of come alongside our team and learn how to do from me, because frankly, the tax efficiency piece is big enough. But if this college planning piece applies to you, if you have federal loans or private loans and you're trying to figure out how to navigate them, please do take me up on my offer to sit down. It doesn't even take us a whole hour. We can sit down in 30 minutes and really come up with a strategy for what the next steps are to do here, because federal loans and private loans are treated very differently. And there are some key things to think about right now, partially because of some of the political undertones. So just know that this is an area that there are a lot of things to think about. Now, one piece that is interesting with regards to the CARES Act and charitable giving, and I'm also going to kind of jump ahead to the Appropriations bill and how it changed the CARES Act, which I think is going to confuse a lot of people. The CARES Act said $300 deduction for charitable contributions, and that's per filing status, if you will. So my husband and I are married, and we file married filing jointly. So we give $300 to our church. That's going to be $300 that we get to take off of our income, even if we file standard deduction. Now, if we each give $300 to our church, we still only get to claim $300. If we claim what's called $300 married filing separately, we still only get to claim $300. There's no way around that with the CARES Act. It is $300 total. What the Appropriations bill did was say, nope, we're going to take that a step further. We're going to let a married couple, both my husband and I, both get the $300. So in that scenario, it will be $600. Now, I'm going to tell you, in the grand scheme of things for how taxes works out, a $600 versus a $300 doesn't actually amount to much tax savings, but it will likely make a significant number of Americans feel like they're saving a lot. Because if you don't follow the tax form through, it feels like, oh, I'm getting to save $600, but that's not how it works, because this is what's called a deduction rather than a credit. So in case you don't know this about taxes, when you have a tax credit, you literally get to reduce your taxes dollar for dollar for every amount of credit. So we like tax credits. Those are great things. So if the government was giving you a $600 tax credit, then your tax bill would lower by $600. So we like tax credits. A $600 tax deduction means that there will be some portion of that $600 that will lower your tax bill. What portion depends on what tax bracket you're in. So it's just going to be less. How much less depends. So hopefully that makes sense to you. Itemized deductions and being able to contribute more is another interesting phase that I think I could lose a lot of people in. But one thing to understand is just knowing that they are essentially with the CARES Act, and this is another piece that the Appropriations bill included or extended, is this idea of people can donate more and have it count on their taxes. That's the simple way of explaining that. So I'm going to pause here for a moment because I just talked a lot and I want to see if anybody has any questions.
Sabrina, I had a quick question that came up. I'm wondering if we can share the slides after the presentation with the attendees.
Unfortunately, I can't.
Okay.
The article I'm going to have on the appropriation bill, I can, and I have an article on the CARES Act, I can, but the slides themselves, I can't. I'm sorry.
Okay. And we have another question in the chat that is to itemize or not to itemize?
That's a great question. So what we normally look at with that is whether or not your standard deduction is more than your itemized deduction. And I actually have a handout I can show. So give me just a second. Oh, we don't want to pause on that ugly screen. Let me pause it on a screen that's, there we go. Hopefully not as ugly. So we have a tool that allows us to essentially plug in the information off of your taxes and then run different hypothetical scenarios. And so what's useful about that is then we can put things in, for example, such as should I itemize or not? Although honestly, that's not one we do very often. Oh, I can't see the itemization here. Hold on, this is not going to help. I have a different one then I can show instead. Okay. So here is an example of a couple that would not itemize. And here's why they would not. Their existing itemized deductions is only $15,000, and they're going to give another $5,000 to charity. So their new itemized deductions would only be $20,000. And because they're over the age of 65, their standard deduction is over $27,000. So it really is kind of an old math equation. And I know I often tell people I don't do as much math as they think. And unfortunately, this is going to make me seem like a liar. But it becomes this type of equation of the itemized side, or sorry, the standard side is bigger. So we go with the standard deduction. Now, if by doing music, you are running things as a business owner, one of the common things that I see wrong is not claiming all of your deductions that you should be doing. And so it is knowing when you are looking at, and this is kind of the piece that I get really passionate about, right, is are you keeping track of all the things you need to keep track of to be able to claim all the deductions that you need to be able to claim? And sometimes when we're good at doing things that are more artistic, we are not as fond at doing things that would make us as good about claiming expenses. And I'm kind of the reverse side of that. I'm not as good at the creative side. So things like tracking all of my receipts so that I can turn those over to the person that's going to actually run my taxes, that's a little bit easier for me because that stuff is all in an orderly place. And I have a folder ready and I say, okay, here you go. Absolutely. That means your membership dues should absolutely be one of those things that you are turning over. That is a wonderful piece to include. So what kinds of things should people, you know what I'm going to do is I'm going to actually, give me just a second. These are the kinds of questions I love. So let's pull up my hypothetical, I'm going to pull up my hypothetical client here live, and we're going to walk through some of the things they may want to make sure they pull up. So give me just a second. All right, so am I back to screen sharing, and does it say what if tax calculator at the top? Perfect. All right, so this is, as you can see, just a make-believe client. And so what I'm going to go to now is our friendly Schedule C. And then we're going to think about what sorts of things are we going to include. Oh, and it's not going to show me my piece. So it's going to tell me Form 8829 is not in the program. Of course, it's going to do that to me just because I'm going to be embarrassed like that. So you only do this when you're being recorded. So then you kind of freak yourself out is what happens. Any other time you'd have no problems. Thanks, Paul. I appreciate that. I know what I'm going to do. Isn't it so much more fun when somebody's willing to show you what they use? I am going to actually pull up what mine looks like and share that. So I was sharing with Joanna before we started that I recently put an offer on a house. And if you've ever done that before, when you are owning a small business, you have to turn over all sorts of fun financial information, which includes I had to turn in my profit and loss. And that is really not fun to do. But it also means I have it right here on my desktop. So if I can turn it over to the bank for that, I can surely show it to you as soon as I find it on my desktop. That's just the hard part. First, my husband's going to be like, "You did what? While you were being recorded?" So as you are thinking about categories of stuff that you can include, you want to think about things like gas, mileage. I know now we're all supposed to laugh because of course you're not doing those things right now. Subscriptions. So are you paying for Zoom right now? Although I heard that Zoom isn't necessarily the right thing for doing, I guess, musical concert stuff. So maybe you have other things, right? I know my daughter is getting in. So here we go. Here's kind of some broad categories, right? So professional development. What sorts of expenses do you have for professional development? Marketing costs, phone costs. Now, what if your cell phone you're using for both business and personal? Advertising costs, office equipment, wages, supplies, technology, licensing, meals and entertainment, postage and shipping and parking. So these are kind of some of the categories. And this can be as complicated or as simple. Personally, we use, one thing that's nice is so much these days, we do so much stuff electronically now. Like if you're using a credit card for so many things, you're getting, everything is being categorized for you almost. Some people also find it very easy to just use a separate credit card for all their business expenses. Even though I'm a financial planner, doing this sort of stuff for myself is not the most enjoyable thing. So I gave myself the small luxury this year of actually hiring a bookkeeper to do this categorizing for myself so that I could focus my time on my clients and let somebody else do this categorizing for me. And what that's forcing me to now do is actually be really good about having all of my expenses go through one place. All right, I want to see if there's any other questions.
Well, and along those lines, you know, if we're talking about, you know, musicians who are trying to be are professional musicians, would that include instruments, instrument repair, maintenance,
all
like
of
that?
those things? I think, and see, here's where I have to be very careful, because one of the lines that Thrivent wants us to be careful on is the difference between providing tax education versus tax advice, right? So I would want to consider, when you're working with a tax professional, you might want to ask them, do I need to keep track of how often I'm using my instrument for pleasure versus work? That's not a question I know the answer to. I know that for me, for example, my cell phone, it is overwhelmingly used for my business. I am always on it for work. It would be very easy from a log perspective that my personal use of it is negligible. And everybody that knows me, unfortunately, knows that I work way too much. I hope that that's not always true. That's just the phase of where I am for my business. I don't know in your world how that's equivalent. I know that we have a guitarist at our church that he has, I think he has no less than 8 guitars. I don't know how many of those he could say were for his work versus his fun. I don't know. And so I think when you have a tax person that you can bounce ideas off of, that can sometimes be a good thing. It's also one of the best things that you can do, though, is have good documentation. And it doesn't have to be a ton. I think people way overestimate what it takes. And I used to be guilty of that. Like, I thought it had to be journals and journals and journals. And then I got a little bit of education and realized it didn't have to be that complicated, right? So just some things to think about.
And I think that Paul had raised his hand too. Paul, did you have a question?
Yeah, I just had a question about if you had expenditures and let's just say equipment purchases before you formed an LLC, is it possible to include any of that on your taxes, being as though that the purchase was made prior to becoming an LLC?
So would it have been, I would investigate how you could include that as part of your startup costs with the LLC.
Okay, I see what you mean. Yeah. So in other words, that would be, yeah, I see what you mean. It would just have to be like the equipment didn't just manifest itself from nowhere. You know what I mean? I paid for it. It was just before the LLC. So I would just have to include that as a startup cost, basically, then. Yeah.
Right. And I think that's one of the overlooked costs, because sometimes people are so excited to start their business that the thought of capturing any of those tax advantages or tax credits aren't necessarily on their mind. And that's not necessarily a bad thing. It's just not always there. Sometimes I think those aren't thought of until somebody has started their second or third business, because they've been through the full life cycle of a business. And then it's like, oh yeah, I wish I would have done that.
Right. Yeah. All right. That makes sense. Thank you.
Absolutely. More questions? All right, I'm wondering if I lost the presentation I was working from. Let's see. I might have. So there is kind of another piece that I think is sometimes missed when we think of being a business owner. And when I say business owner, I really mean on that entire spectrum, whether it's everything from I'm doing, really, this is something I'm doing as gigs. I am going to give a little bit of background here. So before I was a financial planner with Thrivent, which is really, our model is we are our own business owners. My husband and I used to live in Florida, and we were regular employees, but I had my own business in addition to being an employee. That's kind of what we did before we had kids. And that business started as something that I did by myself, and then it grew to by myself plus my husband, and then eventually we had employees, and then well, we never really had employees. We had like independent contractors we would hire as we had too much work. And that's also where I ran into that, oh, I wish I would have thought to do startup costs and do some other pieces as we grew. And some of the things we never took advantage of were some of the benefit programs that are available to you. And it somewhat didn't matter because we were still employees, but it also meant that we lost out on some advantages that were kind of available. Now that I work as a financial planner, some of the things that I see when I meet people is when you are an employee at a company, you kind of get to take a lot of things for granted because an employer just provides a lot of safety net pieces, right? You can have health insurance, or you can have the ability to protect your income, which is disability insurance, or you can have life insurance, or all of these different components that are in addition to your salary. And that looks a lot different. However, if you work in the nonprofit world, or if you decide to start your own business, then those are all things that you have to know to either go out and get on your own or to also include into your pricing. So if you are going to be a professional musician, when you think about how much to charge for your work, you need to include not just the price for that hour of time that you might be performing. You have to think about all of the time that you're not performing when you're practicing and doing all of these other overhead tasks, and include that into. Am I kind of making sense to everybody, I hope? And when last year, kind of as we saw last year unfold and the different CARES Act happened and different safety nets, I think part of what we saw happen is people realized that the safety nets that were available weren't equally available to everyone. And that's, I don't know, I guess I'm probably not doing this as well as I would think, so I'm sorry. Let me get this presentation up and then maybe this will make more sense.
Oh, I don't know if you saw, Sabrina, that we had a question come in about do you consider electing S-Corp status instead of pass-through?
Oh, that is a great question. So when we think about all of these different which way to go from a filing status, right? Do we want to be a sole proprietor? Do we want to be a corporation? And if we want to be a corporation, what type? There's two ways to think about it. I would encourage you to think about what is your, and this is going to sound really funny because you're talking about where do we want to go today? And I'm going to challenge you to think about what is your eventual exit strategy. And the reason you want to think about that is when you eventually leave the business, the IRS is going to tax you on how you leave that business based on the advantages that you got while you were in the business. And so that is one of the key things to kind of think about. And I know it seems really backwards, but as we have had more conversations with, because we've worked with two types of professionals as we've worked with business owners, we of course will sit down with CPAs and enrolled agents to help business owners get their taxes done. But we've also worked with firms that are helping business owners sell their businesses. And so the two questions we come up with all the time are which way should the business have been organized that would have made this better? And the question always comes back to, well, it depends on how you want to leave the business. Do you think you're going to sell it to somebody else? Are you going to pass it on to someone else? Or is it going to kind of just, I don't want to say the phrase die, but I don't know how else to describe the business is just going to end. Does that make sense? That it's not just a matter of where your revenue is today. We want you to think about what's the transition point, and also what sorts of benefit packages you're going to offer around that. All right, additional questions? Okay. So what I want to do is, I know I started to ramble there a little bit, and I'm sorry, that does sometimes happen when I allow myself to just answer questions freely, is I want to talk a little bit about those safety net portions that, well, actually, let me ask it this way first. Is there anybody here that is depending on their music business for all of their benefits? In other words, you're not receiving any benefits either from a W-2 job, either that you're doing or that your significant other or spouse is doing? Maybe, maybe not. Maybe nobody knows what my question is asking, so maybe I...
Just based on kind of, general knowledge of musicians, I would say there's probably usually a mix of, W-2 employment and, employment or, kind of the gig economy and jobs related to the music careers.
All right. Maybe I'll try to ask it kind of a different way, and this will make more sense. At least why I'm asking is, so in the financial world, and I'm trying to think of what I would equate this to in music. And I can't think of where I would equate it to, honestly, unless I maybe thought of it as how in music you generally find it important to learn scales. But that's really a stretch. I don't think it works incredibly well, but that's probably the closest thing to it. But we'll I think that's the closest thing I have, is this is kind of what I'm speaking to almost, is this is the kind of the pyramid piece. And what I often see is people that are business owners don't have this base of the pyramid, because in a traditional sense, if we think of people that are working in the, I go to a 9-to-5 job, kind of in some ways like the old model, what my parents did, right? This base of the pyramid is what that 9-to-5 job would provide. You would get your normal paycheck every week or every 2 weeks or every month, but then you would also get a lot of these check boxes off to the right. You would get health insurance, and you would get life insurance, and you would get the protection so that if you were sick or unable to work, they would also take care of you until you were able to work again. And so they would fill a lot of the bottom of this pyramid. What is different about this, and how this kind of relates to what we were talking about before, is when you are a business owner, you don't get all of these by default. However, if you can structure these in such a way that when you are paying for these, you can make it to where you're not paying, to where they're running as where you're potentially running them through that Schedule C, I guess is how I'm going to say it. Now, you want to talk to your tax person, because remember, I'm not going to give tax advice because I don't know enough about you specifically, but it is something that is a possibility depending on your situation. And so we just want to know that we're taking care of ourselves from a pyramid perspective, because when we don't fill gaps in our pyramid and life goes along the happy valley way, then things are great. We don't have to worry about it. But when life throws us the curveballs, which 2020 did an awesome job of doing, then we get into the groove of, unfortunately, needing to take money out of further up our pyramid, and maybe needing to take money out of places that we had put money for a future need, such as where we put money for an instrument that we wanted to buy later, or for retirement, or for a future trip. And so that's what we don't want to have to do, is to take money out of the top of our pyramid to fill a short-term need, because we don't know when we do that if we're going to have to pay a penalty for taking it out early, or if the market's going to be in a bad place or something like that. Does that make sense? Or have I gone to this is the financial planning part that's really no fun, and it's starting to sound like Greek?
So Sabrina, if I understand it correctly, that there is the possibility, if you are a small business owner, that you can fold the protection part of the pyramid into your small business expenses.
Some of it, yes. And that's really where it's important to work with somebody that can help you understand what pieces can go there. And it's going to tie back to Alex's question about which status should you be, because some statuses will allow you to do it and some won't. And it depends. And some of what's really hard is when business owners don't, it's kind of that age-old question, right? When do I invest in my business versus when do I save for the future? And how do I balance those two? Because when I invest in my business, I am saving for my future as long as I grow. So how do I know when that pivot point is? What does that look like? And sometimes that's what's really nice about working with somebody that is a financial planner, because we can provide that outside perspective, as well as run scenarios to say, well, this is what this looks like. But that is part of the piece. I know I sat down with one client that was, and this was, gosh, I think this was like 5 years ago. And she was very, very successful in the massage therapy world. And I actually met her after she had kind of stopped doing that business, but she told me about how many appointments she ran and what her conversion ratio was, and all of those. She knew her numbers, but what she was just really bad at was understanding how to run the business from the financial side. And if you don't structure things right, you can really not win from a tax perspective. And so it is important to have a system for keeping your receipts and not get double taxed, because you don't know where things go or how to keep them, or, at the same time, you don't want to be, it's complicated. Just to be frank, it is complicated. And so how do you have a way forward so that you can feel confident that you're doing it well and doing it right without it taking over your life either? So there is that kind of piece too. I just realized I didn't have to keep going back and forth. I could just do everything in one screen. So how many of you could tell me how much you're supposed to have in emergency reserves? Would it be kind of a relief to hear, oh, I've got a 3 to 6 months? Three months? Operating costs or living expenses? Great question, right? I have two different numbers, right? I have one set of emergency reserves for my business, because I do have an employee. And I know that if she was listening into this call, she would love to know that I have more emergency reserves to pay for her then I have emergency reserves for my household, right? Because her family depends on me paying for her, and my landlord wants to know that I'm going to pay his rent. So that's one set of emergency reserves. The emergency reserves for my household is a different number. And so those can be two different numbers when you own a business, and where you store those emergency reserves could also be different. A different thing to think about is, what does your emergency number look like if you have, if you're in a household by yourself versus if you are in a household with another working individual? And how does that influence that number? Now, in my case, my husband and I are both on Pathways team, and so that kind of changes our equation a little bit differently, because theoretically, if something happens to my income, since we're both at the same employer, same business, then it's likely impacting his income as well. And so our emergency reserves are a little bit more conservative than they were when we worked for two different employers. Does that kind of make sense? Oh, I'm screen sharing and making everybody dizzy. I have long been a proponent of thinking about emergency expenses from a case of, what is the money that you have to have, and looking at that by a number of months. So for my business, that's 6 months, because again, I have an employee that she's depending on me for her living and rent. So that's 6 months of expenses. My personal home, it's a different amount. Do I recommend putting it into stock or dividend versus savings account? That is another really good question. So I'm going to introduce you to one of my favorite visuals. And the reason I like this is because you'll probably remember I told you that one of the topics I talk the most about has to do with tax efficiency. So if we're going to pay taxes on something, I want to only do it once. So let me talk to you for a minute about these boxes. This tan box, anytime you make money on this box, every year you'll get a love letter from the IRS that says, we want our share, right? This purple box is not very useful for savings. You're not going to use an annuity because you can't get to it before age 59 and a half. Same thing for non-deductible IRAs, and we all know U.S. savings bonds aren't really earning anything right now. So I think we can all agree to disregard the purple box. And then our red and blue boxes aren't, well, the red box is for retirement, and the blue box, this is an interesting box to think of for emergency reserves. So the two boxes that I look at for emergency reserves is, I really try to have my emergency reserves here and only have as much in my yellow box as I have to have for liquidity purchases. Purposes, sorry. So I did just notice what time it was. It's 4:55. This is actually a great question to kind of go more one-on-one on, because then we have to have conversations about how do we use these to kind of go deeper, and what does that look like? It is important, though, to have enough in your checking and savings for liquidity purposes. Sorry, I keep trying to say purchases. So, all right. I think those are the big things we wanted to cover. I will send out, Joanna, if you give me a list of everybody that attended, I can send out an article on the CARES Act and then also the appropriation bill. I think we pretty much covered a lot of these while we were talking within. But I'm also happy to have follow-up questions. All of my contact information is in the article. So.
Great. Well, and Sabrina, I think we had a few people join us a little later into the session, and I think you had mentioned something about being willing to meet with people one-on-one too. Do you want to repeat that?
Yes, absolutely. And I'll put our contact and team information up too, just so people know who we are while I talk about that, if that's okay. Is that our contact screen? Am I sharing the right? Perfect. All right. So to kind of recap, my name is Sabrina Fay, and whenever we are out in the community doing these workshops, what we like to do is, of course, answer as many questions as we can during the hour, and also offer a workshop part 2. So essentially, for being willing to sit down and ask questions today and attend the workshop, if you'd like a one-on-one follow-up, just email me. We will find a time. You can come into our office, or we can do a Zoom session, and that's your opportunity. As many questions as you'd like to get answered in an hour, we will find time to do that. And that's just part of what we like to do to give back. It will not be a sales pitch. It's really just an opportunity for us to give back to the community. So I am part of a larger team. So again, my specialty is really around the tax efficiency, college planning, business planning. But then I have a number of other partners, and we would love to serve you. So thanks again for your time today. I loved all the questions. I hope I wasn't too tongue-tied for you. But again, thanks so much.
Is there an email on there? Or your email, you said?
You know what? I will put it in the chat. I can't believe that in my editing there that I must have not.
Cool.
I'm so sorry.
No worries.
Well, thank you so much, Sabrina. And it's really great to have this partnership that we will have another workshop in April on personal finance. So excited about that. And the Pathways team also sponsored a concert in the end of 2020 concert that you may have seen that we had a bunch of members perform at. So hope we can do some more concerts in 2021 as well. And thank you so much, Sabrina, for all of this information.
Absolutely.